Well, I was just going to say from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry.
Hello and welcome to Money Talks. In today's video, popular investor of venture capital reality program Shark Tank and chairman of O'Leary Funds, Kevin O'Leary, updates about everything from inflation and how it's affecting stocks to cryptos and stablecoins and the upcoming Ethereum merge. Then, Kevin also uncovers part of the basic investment thesis behind cryptos, discuss how cryptos could become the 12th sector of the S&P, and lists some names of coins that Kevin personally owns. Make sure to stick around till the end of this video, where Kevin O'Leary makes a big prediction for Bitcoin and other stablecoins. So, without wasting any time, let's dive right into the video.
Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years, we will get regulation. And then finally, we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard, because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and even Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stablecoins, because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then, of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny. But it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class, because its price will materially appreciate. That's my investment thesis.
Bitcoin and all other cryptocurrencies have been surging over the past couple of days, but unfortunately, the Ethereum merge rally has ended and all digital assets, including Bitcoin, has declined. Bitcoin is currently trading around the $21,000 mark, sliding down from its $24,000 rally. After experiencing significant gains when the Federal Reserve raised interest rates, the token has lost major parts of its momentum. Experts believe that the largest cryptocurrency might slow down to the $20,000 level over the past couple of days. You might say Bitcoin is literally dead or it is on vacation, but there are several factors that pushed Bitcoin to change upward trajectories and head for a slump. Bitcoin's long pause from generating profits is now scaring away even the most avid Bitcoin fanatics.
And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them. And that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more. My attitude is, who cares? This is great news.
The leading cryptocurrency has been trading in a relatively tight range between the $20,000 to $25,000 range. Experts also propose that recession, rising interest rates, and the ongoing geopolitical crises are some of the major triggers that cause stock and crypto markets to slump. Bitcoin fell below the $20,000 mark twice over the past several weeks. This is a price point that is quite critical for the cryptocurrency as experts debate whether the token will see a further decline in coming months. Triggered by Bitcoin, Ethereum declined too and is currently trading around the $1,600 mark. Nevertheless, ETH has experienced more gains over Bitcoin in the recent months.
I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously, they have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously that's even been exacerbated in the crypto market where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And they were unanticipated gains when the market decided that the economy was much stronger than people gave it credit for, and that consumers, still awash in $6 trillion worth of free printed cash, are still spending. So where we go next is a huge debate. It's whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that, and then we'll have to see what the Fed does. But all of this is baked into the market, and earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto.
Since Bitcoin is trading at around $21,000, it indicates that Bitcoin has lost over 70% of its value since its all-time high in November 2021. Bitcoin's actual resistance is the $23,000 mark, which is also its 100-hourly simply moving average. Experts believe that if Bitcoin fails to clear the $23,000 resistance floor and its 100-hourly SMA, its momentum could continue to slow down. The price's major support sits close to $22,000, but unfortunately, the cryptocurrency is constantly rejecting this floor. Any more losses might send the price down to $19,000 once again, and even below that.
Various projects, and I always get people to remember when I can is to say to them, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects will eventually prove out their merit or they won't based on the economics of revenue at some point and all the applications that sit on top of these. So they'll either win because they're good technology or they won't. And so if you're a venture investor, as I am, you want to take a lot of positions because you don't have certainty in what outcomes are going to occur. You need diversity. But in the case of stablecoin, the opportunity, which is so interesting, is that a stablecoin backed by the US dollar and treasury bills, for example, no different than a money market account, would overnight, if it was passed and regulated, let's just take USDC by Circle, for example, and it was actually regulated as a payment system, that would create a standard of payment backed by the US dollar globally. And what politician, regardless of what state they're in, doesn't want that? It secures a place for the American dollar beyond just commodities of oil and iron and other payment systems that are built around commodities that are always backed by the US dollar. But that legislation is very simple. It's 5 pages in some of the bills by Haggerty and Toomey that simply says, look, we audit it every 30 days. We make sure that nothing that's supporting the token is a duration longer than 12 months. And we have total transparency in these audits. Now, not every stablecoin is going to survive the transparent audit, but that's okay. There's enough of them that will, or be started that will. And then we let companies compete, just like there's a money market fund at Fidelity and there's one at Schwab and other firms. That's great, but they're basically all the same because they're FDIC insured and they're regulated. Same thing with stablecoins. So I think that may come first. And what really was the stimulus for that, the impetus, was the Luna explosion, which was very diversified. So, it wasn't just shareholders or token holders in the United States. That blew up all around the world in a spectacular supernova. And now it's obviously disfavors algorithmic based or stable coins. They will not be popular because people have been burned. And that too is a good thing. So you have to applaud the sacrifice of the Luna token holders and how their DNA and their ashes have probably created something of greater value for the next version of regulated stablecoins. And again, we applaud them, we thank them, and they too will not invest in stupid managers. And all of this is great stuff. It's all good. Well, first of all, the merge has been forecasted to occur for 4 years in a row now. So for all the excitement, I'll believe it when I see it. There's a lot of people that are dissuaded from doing this in the Ethereum mining business. So they're not that excited about it. So you've got, an inconsistent harmony occurring. Now anything could happen. But really at the end of the day, ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big ETH position as well. I'm going to wait and see what happens because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen and how financial services work and the cost, the speed, the fees, the transparency, auditability, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects because you just don't know. You can do it by order of market capitalization. That's easy to find out. But that doesn't mean you're right at doing that either. So diversification on this very nascent system, and whether where it all fits, and when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business. And many will go to zero. And that too is okay.
So what do you think is the future of stablecoins? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.